It's time to bring in our next guest. Look at the big picture. Let's welcome in Michelle Gibley, Director of International Research at Charles Schwab. Welcome to the show, Michelle.
Thanks for having me.
All right, so international markets. It seems like the optimism here domestically has been well documented with the S&P 500 just below all-time highs, NASDAQ doing well. What's the picture look like overseas? Because it doesn't seem like any geopolitical risks are really negatively affecting our markets here. How does it look overseas?
Well, one thing that we're going to be looking toward is this weekend's election in Taiwan. And the reason is for not only the impact for Taiwan-China relations, but also U.S.-China relations. And right now, it looks like the DPP party could maintain the presidency, but there'll be a new leader, and his name is Lai. And tensions with China could rise if Lai wins, because he has described himself in the past as a worker for independence. And, he has softened his rhetoric more recently, though. Alternatively, if the KMT party wins, tensions could ease because they seek to engage with Beijing. Now, so what would a win by the DPP party look like? Well, we could see an increase in military drills by China. We could also see some economic sanctions. But we maintain our view that an invasion of Taiwan by China is a low probability over the intermediate term. And the reason is that China is just very interconnected with the global economy, much more than Russia was before invading Ukraine. And so China doesn't want to risk any kind of global sanctions if they pursued military action. And additionally, there's just a lack of popular support among Taiwan citizens to declare independence and provoke a reaction by Beijing. And people kind of forget about this, but in 2022, China imported more semiconductors than oil, and that was mostly from Taiwan. And so China is also reluctant to change the status quo.
Yeah, is that helping ease the tensions here, Michelle, a little bit, is the fact that the Chinese economy has not bounced back like many had expected it to in 2023. We got some data today out of CPI, negative territory for a third straight month. So that issue with China's growth has stalled and actually turned around. Is that actually going to help maybe the political aspects of that election in Taiwan, where maybe they won't be as aggressive if their economy was doing better?
I mean, China's long-term goal is for reunification. But yes, in the intermediate term, they definitely have more of a concern about the local economy. It's yet to gain positive momentum. And like you mentioned, we had deflation in CPI. That's largely dominated by food prices, a reversal of a spike in pork prices from a year ago. But yeah, core CPI is weak, up just 0.5%, and PPI has been falling for a year. And that really just signals a lack of corporate pricing power due to excess supply, weakness in consumer spending, and weakness in confidence. Now, there's a potential for a rate cut next week, but it may not address what ails China's economy, which is weak confidence and not high rates. That said, investor sentiment is also quite pessimistic and valuations are low. So if the government announced policies to reduce restrictions and improve conditions for businesses, that could really boost both the economic and stock outlook.
Yeah, we'll see if that works, because it seems like any of the other things they've done recently haven't really worked to spur economic expansion. One area real quick, Michelle, I wanted to hit on was Japan. I think the market's at decade highs here. Is there still opportunities there in Japan, because they seem to be doing fine?
Yeah, we could actually see Japan putting deflation in the past, and that was 30 years of deflation. And so having inflation is really a good thing, a small amount of inflation. And it means that if we have higher rates in Japan, that means that corporations there are finally incentivized to put cash to work rather than sit on it, and so they could do more M&A and stock buybacks. And there's also a regulatory push to increase shareholder returns. And so we could see Japanese investors reallocate back to Japan as rates rise, and that also adds to the investment case. And Japanese stocks are really quite cheap on a price-to-book basis.
Yeah, and they continue to move higher. All right, great breakdown of the international game here. Appreciate it, Michelle. That's Michelle Gibley, Director of International Research at Charles Schwab, joining us.